involved in insurance industry? And if yes, how can we be ensured that our investments are protected?
That's a very substantive question. The pre-need, they are in. And really the larger issue in the Philippines is the overall supervision of the financial system. We have a fragmented system of supervision. And the world of finance is not fragmented. Funds move
it's
from one...
increasingly interlocked.
Yes, there's this interlocking. You move from bank to investment houses, to insurance, to pre-need. And yet, the whole regime of surveillance and supervision is fractured. You have the insurance commissioner in charge of the insurance industry, but somehow the pre-need was carved out of it and put into the SEC. And then you have the banking, which is under the central bank, which has the PDIC complementing it to cover the insurance. So when you have some of these kinds of separation with each one doing their own surveillance, it is not, and they tell me that they coordinate by having a financial sector forum where the principal regulators all meet once a month to review situations. But that is not, in my view, adequate. You really have to have it within your own organization so that your department dealing with insurance also has access to the banking sector so they can talk to each other. And in the process, safeguard and take measures to protect against any kinds of problems coming up from one sector because they can contaminate the other sector.
Well, so far, you've been discussing how, first of all, if you have on one hand a financial sector that is all intertwined, and yet the regulators have these big walls among each other, and while they may informally talk to each other, that's insufficient because it's only as good as the willingness of the participants to cooperate, but they're not forced to. Also, now, there's another question here that I'd like to ask before we go to the next one, which is a very simple one. You're talking simply from the point of view of the financial regulators and the bureaucracy. What happens when you have members with political office involved who can then sort of lean on one or the other because they pass the budgets of all these?
That is always a risk to the system. And that's the way to combat that is more transparency. I was mentioning earlier to you, Ms. Quezon, that these legislative forbearances have its parallel grandparenting in the United States. If these are financial students, you probably have heard of the savings and loan debacle in the United States in the 80s. And that involved a principal person by the name of Keating. And that Keating had a lot of access to important senators and so forth. So when the regulators were examining his banks and trying to put the enforcements of the compliances, called to the senator calls the head person, no easy, and then it went easy, and ultimately it went to
the whole
failure.
thing collapsed.
So this kind of situation does happen, and probably it's happening here, the way you have put out the 5 faces on top.
Okay, we have another question from the audience.
Yes, Oliver from the audience has a question.
In the case of Legacy, where BSP had knowledge over its financial glitch, up to what extent can the government intervene and exert its authority to protect the public who are doing business with Legacy?
The authority of the regulator will always have to respect the rights of the owners. But when certain entities go into certain activities like in banking, which takes money from the public, there is another level of trust these institutions are conferred upon, and therefore there is a certain level of regulations. That is the whole rationale for bank supervision. It's more sort of interventionistic because of the public interest. That's rationalized by that. No? So the authorities like the central bank has a responsibility to do periodic examinations and ascertain that the bank is soundly run and requires corrective at any moment that's necessary. So the theory is a sound one, but then the practice sometimes have some deficiencies. Sometimes deficiencies not because of the inadequacies, but because they're big financial flows that can provoke certain problems, like a global financial crisis can sometimes disturb the whole structure, and then you need extraordinary reactions. And we should discuss that later on, because we are using that Salceda model in a very wrong way application in the Philippines.
Okay, because here's a question from Reggie through text. Now, if financial regulation here is so poor, why are we still better off than in the U.S., which is collapsing for the same reason?
Okay, that's a good question. The U.S. is not a model regulatory regime. It is very cognizant of its deficiencies today. The whole, we step now into capital markets, and you have heard of the subprime mortgage markets. And these are traded over the counter. And the whole concept here is big boys know, therefore they can deal with each other, dealers. So these are not going through a more rigorous examination because big boys can take care of themselves and let the market grow. So
the layman's explanation given often is that because we went through the crises in the 1980s and then in the Asian financial crisis, our banks and in general our financiers are a little more conservative and don't get into these exotic things. Is that a fair?
Fair enough, but not sufficient because you have legacy.
Yes, okay.
We still have problems here, and I will not take the comfort of the correctives of the 80s coming out of the financial crisis of debt, or the 90s coming out of the Asian currency crisis. And in my view, some of these things could have been avoided, diminished, and minimized if we had the correct policy. We had the wrong exchange policy in the period of the 90s.
Okay.
We were following a strong currency policy, strong exchange rate policy, when China was going for a competitive exchange rate policy. And in the process, when the crisis came, we tried to defend it. We spent $2 billion
our
in
reserves,
1 month, 1 week. $2 billion lost. So, my dear friend, I think we should really be learning from the history of the Philippines. Yes, we have gone through pains, but we have not really learned well. And the analogy should not be the same as U.S. One thing you can come to a conclusion is that the Philippine financial market is not too developed. In being a little bit primitive, there is a little bit safety. No one comes to seek capital refuge in the Philippines, so what will fly away? And the rich guys who had the money, park it in Lehman's. They got burned.
No,
There's nothing more to fly away. There are rumors about whom and what not that had the money out there. You just hope that they don't come back and try to go and recover that from other kinds of corruption. But nevertheless, the U.S. situation is a little bit different. Same in the sense that they also have a fractured regulatory system. Different in the sense that they have a rather laissez-faire capitalism philosophy. They don't want to have too much interferences in the economy. It was run during this Republican period of
with basically
bushy-wushy.
hands-off policy.
Yes. So, and many of these things come up with financial instruments, which did not go through the rigors because they feel that these financial instruments were traded among the big boys.
But then it turns out it's got out of control.
Got out of control because they sold it to guys who were supposed to know better. They got some raters to rate it AAA. The raters would pay for what they rate. So the whole system was self-serving.
Okay, but at this point we have another question from the floor, and then we'll be reading a comment.
Yes, Juno has a question for us.
In the line of Prospero Nogales being involved in this legacy group scandal, would you rather consider him as one of the conspirators or also a victim?
May I say that in questions like this, you have to have due diligence and evidences. The answers will be speculative. I have my speculation, but in a public forum like this, allow me to be keeping that a confidential view.
Okay. Now, finally, let's look at my view. And if you want to read more about it, just visit the Inquirer and other websites. Now, Overlooked as the House of Representatives made noises about the collapse of Legacy was how their leaders and members were stuck in an inescapable conflict of interest.